All right, hello everyone. Okay, let me get this right. Okay, hello everyone. Good evening. If you can hear me right now, say hi, drop a note, and we can commence the session after that. Okay, awesome. Thank you very much. And welcome once again to Portfolio Building Live with Terence over here. And we're going to get this week's session started together with all of you. All right, give me a minute. Yep, I'm just going to prop up the mic so it's going to make it easier for everyone. Okay, now, so welcome once again to Portfolio Building Live with Terence on Friday evenings. And market is open, so let's get ourselves started. Now, so my portfolio is pretty packed right now. Okay, as you can see, right now I'm using a capital of $90,900 out of our $100,000 portfolio that we have set for portfolio building with for cash flows. So what I'm going to do is, if I'm going to add on new positions tonight, I've got to consider closing up some of the positions. Okay, and we're going to look at that in a little bit. So for all of you who is joining me right now, okay, now, so it seems like we have a lot of new participants, okay, because we're seeing a lot of Facebook users right now in our session. Now, if you have just commented and say hi, could you just do me a favor and click on the StreamYard.com/Facebook link that you're seeing in the Facebook post itself, okay, and approve StreamYard for access to Facebook. Okay, now this will allow us to see your name as you comment over here on our Facebook live feed itself. Okay, all right, now, so this is how the streaming platform works. So we hope to get all of your cooperation over here, okay, and help us do this. Yeah, okay. All right, otherwise, you just appear as Facebook user on our back end over here. Now, thank you very much for doing so. So before I go ahead as well, please do remember, all right, that in this session over here, I will be doing live trades on my portfolio, and I'll be doing live analysis as well. So before going ahead and doing any of these same trades on your very own account and platform, please do your own risk assessments and judgment and make sure you're comfortable with the trade and the stock itself. Should you be assigned the stock, you should be willing to hold on to the stock itself. Okay, all right, so do your own judgment, do your own risk management before you decide to follow on with the trades. Okay. All right, now, so let's move ahead. Let's get ahead right now. It is Friday evening after all for everyone, okay? All right, so I've hid the comment. We're ready to go. So what I want to do over here is I want to talk to all of you, okay, first about the market, okay? I want to talk to all of you first about the market. Now, why do I say this? Because what I have right now and what I see in the markets right now has left me with some concerns, okay? Now, why do I say it has left me with some concerns? Give me a minute. My platform is playing punks on me again. All right, awesome. All right, now, so I just want to pull over to the charts over here for SPX. So what we're seeing right now is obviously that tonight, okay, yesterday was a new high, and tonight we have another new high. Okay, but one of the problems that we have right now is really this. What you're seeing over here is that the S&P 500, my drawing tool doesn't work too well. Oh, man. Right, the S&P 500 is making a new high over here, right? Where else? Right, the RSI is seemingly forming a new divergence. Yeah, right, and the stochastics is also making a new divergence over here. Drawing two doesn't really want to work. Yeah, okay, so unless we see some continued upside over here, okay, unless we see some continued upside, okay, that can push the RSI indicator to a new high and the stochastics indicator to a new high, and also the MACD to a new high, all right, the market is in what we call a pretty precarious situation. All right, now I say this because while the news of the stimulus bill has caused a buying frenzy back in the market this week, okay, but what you realize is the opposite happened with the bonds. Yeah, okay, the bonds had what we call a lack of effect over here on the stimulus bill. Okay, and that is actually kind of like a negative for the market, all right, because you need to have everything reacting to the same tune. Okay, so if bonds are not reacting in the same direction over here, it's like a warning shot that's being fired in the market. All right, and apart from that, okay, what we are also seeing this week is also this. While the SPX is heading higher, all right, we not only have divergence on the daily charts, okay, we also have what we call a divergence on the weekly charts. Yeah, all right. So as all of you can see, we are making a new high for this week, all right? But on the weekly chart, we can clearly see that the RSI indicator is sloping downwards, all right? And so is the slow stochastics, yeah, okay, all right? So that is another cause for concern over here, right? But what is also another reason for concern, right, is that this time around, yeah, all right, this time around, okay, as the market pushed higher, all right, do you realize that the trillion-dollar companies did not make the move? Yeah, all right. So there seems to be also what we call fatigue in the market. All right, fatigue in the market because Apple has not made a new high. All right, Google did. All right, Google did because of the earnings. Yeah, all right. Now Facebook didn't make a new high as well. Yeah, okay. Now let's see if the favorites for everyone did. All right, Tesla didn't make a new high as well. Yeah, all right. Now, so you know what we're seeing over here is really a little bit of this fatigue that is taking place. Even Amazon didn't make a new high. Yeah, okay, now, so these were the trillion-dollar companies that were pushing the market to new highs the last time we saw it. Okay, but this time, the very same companies are not making the moves. Okay, now, so this shows us that, you know, we have this, what we call some kind of fatigue that's happening in the market right now. And this could be leading up to what we call the bear trap. Okay, because we had some pretty severe selling last week, and we are expecting the rebound to come in, of course. And this week may be the week where we see the rebound. All right. So you know what comes next is really the most important part over here. All right. So next week we're going to see some very interesting things unfold over here because market has broke a new high. All right. So it will start to suck people into the markets over here. All right. Thinking that the new bull has erupted. Okay. So people are going to chase this for the fear of missing out. Okay. Now, so what I'm going to do over here is I'm actually going to position, all right, for the what if event. Okay, so tonight in my session over here, I'm going to position my portfolio for what I call the what if event. Now, so let's go ahead and do some portfolio maintenance because I already know what position I want to add. Okay, if any of you have comments that you want to share about, or you know you want to tell me that my analysis is a little bit incorrect, it's a little bit skewed, please feel free to do so. All right, because you're entitled to your own views as well. All right, I'm just trying to share with all of you my experience with the markets, all right, and what I think is really happening in the markets right now. Okay, and how all of you should be trying to position your portfolio so that you do not get caught blindsided. All right, you do not get caught blindsided. Now, first, ED, all right, so our assigned consolidated Edison shares, all right, are sitting along fine. All right, as you can see right now, the stock is still above 70. All right, but we have already sold a call option on it with a $70 strike that expires on 19th of Feb. All right, so I'm not going to touch this position just yet. Okay, so I'm just going to hold it all the way until expiry. Okay, and you know, if it gets taken away from me, that's good because I'm still going to be making some profits off this trade as well. Yeah. All right, so I've collected 85 cents premium when I sold the put option. All right, and another 95 cents from selling the call option. All right, and I will buy and sell the share at a break-even price over here. All right, so all the premiums that I've collected would end up being my cash flow and my profits from this trade. Okay, so I'm happy with that. All right, now next one over here is we have some trades on Campbell, we have some trades on GIS, all right, and we also took some trades on Verizon and AT&T. Now I'm very comfortable with all these trades and all these positions as well. Right now, the reason why I say this is because all these stocks are what we call defensive stocks over here. Right, last week when you saw the market collapse, right, if you noticed, all right, our stocks were flourishing amidst the market collapse over here. All right, so while the market was actually coming off, all right, it is all these what we call undervalued and defensive natured stocks that were actually pushing the markets or holding up the markets over here. All right, so while we're having severe rate days when the S&P was down 80 points, all right, these stocks were actually in the positive. And they're not only positive, but they're positive to the tune of 1% and more actually. Right now, of course, this week when the market rebounded, right, money flew out of these safe stocks and it moved back into some riskier stocks. So we're actually seeing some sell-off in these counters over here. Now, so to position myself, okay, for the next market down move, okay, what I'm actually looking to do is to actually re-establish my hedge position. All right, so we have closed out the hedge on the VIX over here last week. All right, I'm actually looking to re-establish it into the portfolio. All right, so we got a good time to do this. But before I do that, I'm going to close some positions right up now. Okay, now, so what I'm going to do is I'm going to choose between my Campbell soup position, all right, or my GIS position, okay, to look for close over here. Now, both of them are very, very similar. All right, both of them very, very similar. So I'm just going to make a choice over here, and I'm going to call it on GIS today. So what I'm going to do over here is I'm going to issue a closing order on my GIS trade. And with the market premiums right now, okay, we have, let me just verify this first. All right, we have the 19th of Feb, all right, 19th of Feb, $55 put option. All right, we collected 85 cents when we sold it. Okay, right now today, okay, these put options are worth 34 and 39. So the last done is 38 cents over here. So I'm going to pay 38 cents and get it closed right now. I'm not going to negotiate because I want the capital to be freed up over here, all right, and actually put it in towards my portfolio hedge. So I'm going to pay 38 cents to get this order closed over here, all right, and that should get done. Okay, now, so if any of you have positions, I see some of you jumping in at 36, yeah? All right, it is so obvious, everyone. All right, who's the culprit? All right, leave a comment and let me know who's the culprit. All right, now, so someone jump ahead of you, 37. Right now, even if we're going to take it at 39, all right, that's absolutely fine as well, yeah? All right, so if you do feel like you need to release some margins as well from your accounts, all right, please feel free to do so, all right? Paying up to 39, it's also fine over here. Now, so I'm just going to record this as a closed position on my portfolio at 38 cents. All right, so let's go ahead and close this, the GIS trade at 39 cents over here. All right, now, so having done that over here, that would yield me $138 in cash flow. All right, and I've closed this over here on today is the 5th of Feb. All right, 5th of Feb. All right, that will release my margin requirements over here. All right, and give us a final profit of $138. Okay, all right, so that's another winning trade on our portfolio so far. All right, and we've done pretty good since we've started over here. All right, so I'm just going to highlight it in green. Now, next up over here is, let's also look at CPB, all right? And I just want to take a look at, I don't think I need to release this position right now. Yes, I'm not going to release this position right now. For one simple reason, I do think that this stock is still undervalued, and I've already released up some margins from the GIS position. So I have enough capital right now, okay, to take on my portfolio hedge. Yeah, all right, now. So I've released this position. I've taken my profits on it. I'm comfortable with VZ right now. I do think that VZ is going to rebound very shortly. It's in the money right now, but I'm still comfortable. And in fact, even if I'm assigned the stock, all right, I'm more than happy to be an owner of this stock right now for some various reasons and very obvious reasons. Because even at this price, if you get the stock right now at 55, I'm still getting a dividend yield of almost 4.5% from this stock. Right, so of course, my purchase price is going to be $57, but that's still going to probably give me a 4.25% dividend yield, okay, if I'm assigned the stock. So I'm more than happy with that, actually. Right, and this stock is trading at a PE of about 12.8. Okay, so that's not too bad as well in the current market or valuations. And I honestly do believe that if the market comes off, all right, money will flow into safer stocks like VZ as well. Yeah. All right, now, so I'm comfortable with this trade, so I'm hanging on to it. So let's go to our VIX position over here, all right, or VIX trade, yeah? Now, so what I'm going to do is I'm going to reestablish a trade that I've done many times in our portfolio over here. Whenever I feel that the market is overvalued, what I'm going to do is I'm actually going to do a portfolio hedge, which means this position will actually be profitable when the market corrects itself. That means when the markets go down, all right, this underlying asset would actually be profitable. All right, so what I'm going to do right now is I'm going to pick the 17th of March. Okay, I'm going to pick the 17th of March expiry. Okay, I'm going to sell the $21 put option over here. All right, I'm going to sell the $21 put option. All right, I'm going to put in the standard 3 contracts over here, and I'm going to do it at the 60 cents credit. Yeah, right. Nothing to shout at over here. I'm just going to put it in at 60 cents credit. Okay, and as all of you can see, it's definitely the bid price, and I've just got the order done, everyone. Yeah, I've just got the order done. Let's verify it for all of you. Okay, so at 2148 minutes, okay, which is the clock for this broker's platform. All right, it's 1 hour time difference. I have no idea why. Yeah, all right now, but I've just got the order filled for the VIX $21 put option. I've sold 3 of them over here. All right, so 3 of them at 60 cents. All right, 3 of them done at 60 cents over here. Okay, all right now, so let's go ahead and put it into our portfolio right now. All right, and then we'll have a look at how it looks. So I'm just going to copy and paste to make my life easier because it's something that I've done many times over. All right, so this is trade 34 over here. All right, I just sold 3 of the VIX put options over here for expiry on 17th of March. 17th of March, the $21 strike. Okay, I've done this over here on 5th of Feb. Okay, and pocketed 60 cents. Okay, 60 cents credit. Right now, so that's going to bring me a cash flow of $180 over here. All right, cash flow $180. Now, so if I do get a quick correction in the market, all right, sorry, let me do the capital requirement on this trade. So the capital requirement on this trade is going to be, no, it's definitely not $21,000. This is definitely not right. I had an error calculation. Now I know what's wrong. So my portfolio wasn't at 90,000. I'm so sorry for my mistake over here. Right? It shows I'm human after all. Oh well. All right now. So my portfolio right now after today's position, it will cost me $6,300 in capital to hold this position over here. Right? And my portfolio exposure is actually accurately right now at $68,000. Right? $68,100 exposure right now. Okay, now, so what am I going to do with this portfolio hedge? Anytime where I had another one of those market corrections over here, all right, and if I do see the premiums drop to about maybe 15 cents or 20 cents, I would consider closing this trade over here and taking off the portfolio hedge. Yeah, all right, but first we'll see this and we'll monitor this position together. Yeah, all right, as of right now, this is the only trade that I want to add to the portfolio today because many stocks are still currently overvalued. Okay, and many stocks are still having to go through their earnings reports as it is earnings season as well going on right now. Okay, so I do not want to be too gung-ho right now and going out there and challenging this market. Now, so we do have some positions and some good positions on defensive counter. All right, ED is defensive, is utility. All right, CPB is a food-related company, so there's definitely defensive. All right, and we have 2 telco companies which are definitely defensive in nature as well. Now, so last week I talked about the Nokia position that I have. I still have a 19 of Feb $4.50 call on it. Nokia enjoyed the GameStop move over here, so it surged upwards as well, right? But of course, it has since fallen back down. All right, so it's since fallen back down over here. All right, so we're in pretty good position. The stock is nowhere near or above the strike price anymore. So we'll continue to hold on to this stock and keep our positions. All right, but you allow me to collect the premiums of 19 cents that I've gotten over here. But let's see. Yeah, all right, let's see. All right, if it expires worthless, I may actually sell another set of $4.50 call on it. All right. Now, so I have 2 stock positions right now that are assigned, all right, Nokia and ED, all right, and these are the only 2 stocks that have been assigned since we started this portfolio in July. Yeah, okay, all right. Now, for the rest, they were all profitable trades, and we have 1, 2, 3, plus the VIX position, 4 open trades right now with options. All right, so 2 stock positions on a covered call, all right, and 4 option positions on a portfolio puts. Okay, all right, now, so I'm pretty much done at this moment, but before I get there, all right, what I want to do is probably this. Let me see if I can get up. I don't have one over here. Right, give me a minute. All right, everyone. I just want to pull a PowerPoint up because for the benefit of those of you who are new and joining us today, I just want to draw out and map out roughly what are we trying to do and achieve in our sessions over here with the public on Portfolio Building Live on Fridays. Right? Okay, now, so I'm ready to go. Give me a minute. Okay, great. Now, so I hope all of you can see my PowerPoints right now, because what I'm going to do is I'm going to start drawing over here. Now, so when we are selling portfolio positions right now, what I'm effectively doing is really this. I need drawing too. All right, now. So what I'm really doing is this. When I find a stock, all right, let's take this X spot over here as the stock price. Okay, now, so what I'm really wanting to do is this. All right, let's say, for example, I happen to see Campbell Soup at $46.15 today. Yeah, okay, all right. Now, so if I do think that this stock price is actually cheap for this particular stock, all right, and it also pays me dividends if I become an owner of the stock as well, all right. So one benefit I'm going to get from owning this stock is definitely the dividend return or the dividend yield, right? But of course, another bonus that I get from buying the stock will also be when the stock goes up, right? So when the stock goes up, then I'll be able to make a capital gain on the stock as well. Right, so it's very much like investing in property. You get both income in the form of dividends, but also capital gains when the stock goes up, right? But instead of trying to pocket those dividends, which comes once every quarter in the US market with these kind of stocks over here, what I'm really trying to do is I'm trying to create my own dividends even before I own the stock, right? Now, so how do I create these payments that I want to get over here? I can do so, right, by basically selling a put option. Right now, so why sell a put option over here? Because when you sell a put option, okay, now it gives you the obligation. Okay, so I'm just going to do a short tutorial over here. All right, okay, bear with me. All right, everyone. Now it basically gives you an obligation, right, to buy the stock. Now, so this obligation happens at the put option that you're selling. So if I'm selling the $45 put option on Campbell Soup, right? So let's say this Campbell Soup. So if I happen to sell the $45 put option on Campbell Soup, right? Now my obligation or my promise that I've given to someone, all right, is the promise that I will buy the other person's stock at a price of $45. Now, but in exchange for this promise, right, the counterparty has to pay me up front. Right, so he has to offer me a payment up front in order to get this obligation in return from me. Right, so in this case over here, right, so I'm able to pocket a premium. Right, so this premium is what I'm actually collecting over here. Okay, based on like what you saw just now. So we sold the VIX, we collected 60 cents. All right, so the 60 cents is this premiums that we're talking about. All right, now, so what happens over here is if the stock continues to stay above, right, we have no obligations that need to be met. So think of this similar to an insurance company, right, where they sell you a policy, right? In that policy is a promise to pay up if an accident happens, right? But should there be no accidents over here, no claims can be made. So if no claims are made, what happens is on the deadline, all right, the policy just lapses. So for options over here, we have an expiry tag to every option. So once the expiry date comes, right, and the customer does not get to make a claim, yeah, all right, doesn't make a claim over here, then the option lapses as well. All right, so what we get to do then is we get to pocket the premiums over here, all right, that we have gotten from the first day where we sold the option. All right, now, but of course, if it goes down over here and below, right, what your customer is probably going to do is we're probably going to try and submit a claim, all right, and force you to buy their shares at $45 over here. Right now, but you must understand, by selling this $45 put, I said it very clearly, this is done on a portfolio basis, which means, all right, I'm more than happy to become an owner of this company and this stock at this particular strike price that I'm selling it. All right, so instead of just owning it up front, all right, I'm trying to generate cash, right, before I even own the stock, right? Because, all right, stock ownerships can be a very, very costly affair. All right, and sometimes when you own a stock, the stock may not move or you may not go up for a really long time, especially when it comes to defensive stock, right? But by selling options on a month-to-month basis or a bi-monthly basis, right, I'm confirmed, all right, this cash flow payment that I'm collecting in the form of premiums. So if I sell an option every 2 months, right, I'm getting some payments, for an obligation to own the stock, right, every 2 months over here. right? And a lot of times you can be generating premiums, right, that is equivalent up to 20%, right, in annual returns, right, simply executing such a trade, right? And as all of you can see over here, every trade that I've taken, I put full cash up front, which means if I need to own those stocks, my portfolio actually has the cash and enough cash to actually be an owner of those stocks. Yeah, right. So I'm not actually taking any portfolio risk at all, right? And also, one of the reasons why I say I'm taking on no risk is because before you decide to sell any of these portfolio put options, one big consideration you must have is the fact that you must be able to see, right, that none of these companies that you're selling put options on, or you're a willing owner to become on over here, right, should ever foreseeable, right, be a chance of going bankrupt, right? Because if you don't see them as a chance of going bankrupt, right, then it's like, something that's never going to happen, right? So yes, it may not go up, but no, the company is not going bankrupt as well, right? So the worst case scenario for you is probably a stock that's probably not going to move a lot, right? But you can still continue to sell premiums and generate more income over here, like what we're doing with ED, like what we're doing in Nokia as well. Yeah, all right. Now, so we're taking a very, very simple basic approach over here with options. All right. This is like basics to option selling 101 over here. Yeah, all right. So many strategies out there can be done. Right. But this is like the basics of everything over here. Right. And I'm more than happy to share this knowledge with all of you, and it can be done free over here. And using such a strategy like what I've done since I've started portfolio building live with all the participants over here is to sell put options, put up full cash. If anything happens, I own the stock, all right? But by doing so, all my positions are leveraged on full cash. That means I have the capital to actually pick up those stocks. Now, but of course, right, in my mentorships over here and in my community, I actually teach my students and my graduates how to do similar things over here, which means to sell options, collect premiums, right? But we do so, all right, with much, much smaller capital. All right, so yes, we do take leverage over here, but no, we do not run the risk of margin. Yeah, right. So our students never ever face a margin call issue. All right, and we never ever want to take issues of the stock itself. That means we do not want the ownership of the stocks. All right. So if you're interested to find out how you can sell options with a much smaller capital base, all right, of like $2,000, $5,000 to start with, all right, think and consider of taking up one of our trading memberships over here. All right, find out how you can join one of our trading memberships, or also one of our live mentorship programs that we are running out there. Okay, right now. Okay, so send an email to my team over here if you're interested to find out more on how you can become an option seller and start generating all these premiums with much, much smaller capital than the portfolio we're building together today. All right. Okay. Now, so I do hope that this session has been very beneficial for you. I just wanted to bring up some basics over here because I realize that we have more newcomers that are joining us on Fridays over here. Now, if I can ask for your assistance over here, right, and you could help me by sharing some love as well, right, because we have been doing this session consistently over here week after week on Fridays, barring market holidays that occurs on Friday. Okay, now if you could click the share button on the Facebook post right now, okay, and help me share the videos out so we can reach out to more people over here and also help them build a portfolio during these difficult times, all right, to let them make more and do more with their capital and their money, all right, and also in a very, very safe manner over here. Yeah, all right, please share this out with everyone, okay, and your friends as well, so they can find out a better way to invest for their portfolio. Okay, right now, so as I've tried to seek out for questions over here, is there anyone with questions where I can pick up and hopefully answer before I call the session to end this Friday? Okay, I'm just going to switch out back to the portfolio screen over here. All right, awesome. Now, so thank you very much for joining me over here. It seems like we do not have any questions from our live participants, right? But if you are joining me next week, all right, do feel free to bring in some stock suggestions. All right, I'll be more than happy to accept some stock suggestions, and we may actually discuss, all right, if it is a viable time and a viable moment to actually start selling some put options on them for your portfolio as well. Yeah, all right. So Facebook user here is asking, all right, Terence, could you do me a favor as well? All right, before I go ahead and answer your question, could you just click on the StreamYard.com link over here? streamyard.com/Facebook link, all right, and then approve it for Facebook use, all right. So I'll be able to address you by your name itself, yeah, all right. So hopefully I'll be able to address you by your name itself. Okay, so I can address you directly with the questions that you just asked over here, yeah. All right, that would be awesome over here if you could help me do that. All right, hang on, let me just go do a search over here. Kane. All right, okay, Kane, is you. All right, now, so I spotted you over here, Kane. All right, now, so what happens over here is when the VIX put options expire, all right, if it's in the money over here, what's going to happen is it's going to be settled. Yeah, okay, but the problem is this. When you sell VIX options, yeah, all right, VIX options are not based on the VIX itself, which means when you sell the VIX options over here, let me just do this. Okay, when you sell the VIX options over here, now the price that you're seeing over here is actually not based on the VIX index. That means the options that you're trading over here is not actually based on this VIX index that you're seeing, right? But their prices are actually based on the VIX futures. All right, so they're trading based on the VIX futures itself, right? So this is where the VIX is. It's a complicated product for beginning investors over here, right? It's a little bit more complicated because you need to know. Right, you actually need to know for the options that you're selling just now, right, which expiry on the futures is actually tagged to, right? Which expiry on the futures is actually tagged to, right? Because if you look at this right now, we were selling the 21 strike. Okay, we were selling the 21 strike. Okay, and the VIX right now, the VIX index itself is actually trading at 2180, right? It's actually trading at 2180. But if you look at the VIX futures, which expires on March 21st, right, the VIX futures right now is actually trading at 2585. Yeah, right, it's actually trading at 2585, and that's the reason why the 21 put, right, was actually still trading at such a low premium. Yeah, all right. So many of you were actually wondering that. Yeah. Okay. All right. Now, so if it does get a sign over here, all right, what they'll do over here is they'll take the marking price on the VIX futures itself, right, and then they'll do the settlement from there. Yeah. Right. The profit and loss settlement will be based on this. Okay. All right. Now, Andy. All right, Andy. We do not do strangles in this portfolio building live sessions over here. All right, but we may start to cover those in our trading memberships with our members. Yeah, okay, so in this portfolio live session over here, let me address Andy's question. Let me bring it up. All right, so Andy is asking, do we do strangles? All right, so I do strangles, and I plan to do some strangles over here in my trading memberships, all right, where our members over here get to join up to 104 live trading webinars together with me and my fellow traders over here every year. Okay, now, so we do cover that because we have much more time to spend with our members and also trade live with them in a live market environment. Okay, but in this public session that I'm running right now, okay, I want to keep it to a very basic manner and show the power behind option selling, whereby such a basic strategy, even without leverage itself, okay, you could be generating portfolio returns of 20% and above. Right, so if you're interested to find out more strategies over here, you can check out and send an email to my team over here at b&impossibleinvestors.com, right, and find out more about mentorship programs. Yeah. All right, now, so is selling put options workable in a bear market? All right, now, this is such a common question that we always get from, participants over here, because your first goal, your first aim is always to think, all right, that when the market collapses, all right, every single stock is going to go down, right? But that's never the case, right? Because if we go back to last week, all right, let me just pull back the chart last week again, all right, and you'll clearly understand what I'm trying to say. All right, so let me quickly erase all my drawing over here. All right, and let me bring out a correlation. No, this wasn't what I want to do. I apologize for that. Give me a minute, everyone. Yes, I got the one I wanted. There we go. Right now, so what I've done over here is I've added a comparison line over here onto my chart. Right, so the purple line that you see on top is actually the SPX. Right, so what we have over here, you realize over here we had this dip, right, and this was last week over here, right? Right, so we had this dip over here in the market, yeah, all right, okay, the rebound over here, and then the dip again, yeah, okay, so we had the dip. I think it was Tuesday, Wednesday, Thursday, it rebounded, and then Friday it dipped again, right? Now, so during this time, all right, could you see GIS was actually going up? Yeah, all right, so GIS was going up over here. If I show you Campbell Soup, it's doing exactly the same thing. It was just surging up over here, right? If I show you Hormel as well, all right, it was surging up as well. Yeah, all right, even ED, right, our utility stock, all right, it was actually stable. Yeah, okay, so it's not so much of how the strategy works, but it's always how you're able, right, how you're able to find the right stocks, right, to sell the put options on, right? Because if right now in this current market, right, and it turns bearish, okay, if it turns bearish and you are considering selling put options on stocks like Tesla, on stocks like CrowdStrike, on stocks like that were high flying, right, when the markets were positive, when the markets was bullish, then you're asking for trouble, right? Because what goes up so much, right, has a lot of air pockets to come down that much. Yeah, okay, all right. But instead, if you find the right stocks over here, the defensive stocks, right, they are usually the one where money gets popped into when the market goes into a bearish state. All right, okay, now I hope I answered that question as well. Okay, all right, now, so EL, right, you might want to ask those questions over here into our trading membership sessions. Yeah, all right, we'll show you how to set up the scans over here to pick up these undervalued stocks. Yeah, right, so pick up the questions over here and ask during our trading membership sessions, all right? Okay, right now. So Facebook user is basically asking, how do I know a particular option or stock would go down, right? And what determines the put strike price? Now, so these are exactly the things over here that we will cover in our trading memberships and also our live mentorship programs. So like I mentioned just now, if you're interested to find out more about how you can pick up the skill sets of being an option seller, right, do send my team, right? Do send my team an email over here. All right, I'm just going to put it up once again. Right, do send my team an email, right, so they can get in touch with you about our next program schedules, right, and how you can be part of our community of option sellers over here. Yeah, all right, get on your way to creating some real cash flows for 2021. Yeah, right now. So let me pick up one last question before we end the session tonight. Yeah, thank you all for the questions. I love them. Yeah, all right, love them very much. Okay, if you enjoyed the session, you can help me by just clicking the like button as well to let me know that you enjoyed this session today. All right, it's benefited you as well. Yeah. Okay, otherwise, I just get the feeling that I don't know if such a session is actually beneficial for those of you who are turning up every single week. Yeah. All right. So Andy is asking if I open the sell call at expiry, the price went above the strike. Okay, Andy. So Andy is asking again, Terence, if I sell the call option and I'm selling a naked call option, all right, so if it gets assigned over here, will the platform actually assign me a short sell 100 shares? Yes, that's exactly what happened. Yeah, all right. So because if you sell a call option, the obligation is to sell stocks. So if you don't have any stocks in your account, what they're going to do is they're going to end up putting a short sell position in your account. All right, and this can be actually very risky. All right, this can be actually very, very risky because what's going to happen over here is imagine if you are in a position on a naked call. Yeah, all right, and the company gets bought over. Yeah, all right, so you're subjected to this very, very heavy upside risk over here. So, selling portfolio can be done on a portfolio nature, whereby, you can pick stocks that you're happy to be owners of, right? And by doing so, right, that means you're very confident of the downside on the stock. But you should never be selling naked calls, right? One of the reasons I always tell my student is because you never can estimate, right, how high the stock can go, right? Just like Tesla. People say that the limit is at 300, the limit is at 400, right? And if you short the call option and you're now holding the short stock, right? You're holding a stock at $300 where right now it's trading at $800 over dollars. Right? Where's the end? You don't know. Yeah, right. So Andy, the only reason why I sell call options right now is because I actually have those stocks. They were assigned to me, right, from the put options that I sold. Yeah, right. So if anything happens, all right, I need to sell those shares. I actually have those shares in my account, right, that I could hand over to the customer. Yeah, okay. So it's for this reason that's why I'm able to sell call options. So these are what we call covered call positions, where I actually have the stock to deliver to the counterparty in the form of an assignment. Yeah, right. So if you want to sell call options, this is probably the best way to do so. But of course, is there a better way to sell call options and be a collector of premiums? There definitely is. Okay, there definitely is. Yeah, okay, so join our memberships if you want to find out more and how to trade sell call positions over here. All right, now, so Andy is asking, last question, all right, Andy? So they did not minus my cash in position. Right, it appears that I have minus 100 in my position, but I have to buy to close it. It happened to. Why are you trading GME? All right, that's the problem. All right, I've been telling people, all right, in last week's session over here, if you have missed the boat, if you have missed the first boat, if you have missed the second boat, do not get into GME. All right, never ever, never ever. All right, because when a short squeeze happens, people get caught in what we call the element of surprise, right? And the element of surprise only happens once, right? Now, if you go ahead and scare someone by going boo, right? How often do they get scared? The first time. If you do it a second time immediately after that, do you think they're going to have any reaction at all? No, because they're prepared for you. Why do you think the squeeze on silver never worked? All right, because when how do I say this? When GameStop happened, all right, okay, all the professionals were a little bit shocked and they were looking at GameStop. All right, okay, so when the AMC and the other stocks proliferate as well, right, so they were still focusing on GameStop, all right, and then they realized all these stocks were pushing as well. But when all these things happened, all right, it brought to their attention, brought to their attention of what people were trying to do over here. So with the professionals with all the money that they have on their back, right? They are ready. They are ready to kill the retail investors. All right, it's just the game of Wall Street. All right, you can't blame them. All right, because that's how they make money. Right? They're not. They don't have a personal agenda on you. Right? But they are on the counter side, which means you are trying to trade to make money. They are doing the same as well. Yeah. Okay. All right. So never ever get trading on GameStop, because if you know how to trade options, you'll realize as well. Anytime when you're trading options during this period after the squeeze, right, the bid and ask difference can be as wide as $2.50 or $5 apart. That means by just entering a trade, right, you are already down by $2.50 and more. Yeah, all right. So it's never ever beneficial as well. Yeah, all right. Okay. Now, so if you made money on it, great. All right, keep it that way. All right, don't try to get in on it again. Congratulations. Yeah. Okay. Congratulations. Yeah. Okay. All right. Now, so be very careful. Be very careful. Yeah. All right, congratulations, you made money on it, great. Okay, now, because all short squeezes, okay, creates the pocket, which means it goes up, yeah, okay, all right, and it comes down, okay, but the problem is this, how fast it comes down and how quickly it comes down, and will it rebound again, nobody knows, yeah, okay, nobody knows. So, in the way of option selling and doing it for that long, I guess I've seen enough of these to know that I'd rather let these opportunities go by than to try and squeeze them over here. Yeah. Okay. All right. Now, the platform will allow you to go short sell shares on margin. Yeah. All right. On margin. So the difference in terms of the cash balance on your portfolio is not significant. Yeah. Okay. It's not significant as compared to buying shares. Yeah. Okay. So that's why you probably didn't see a major dip over here in your cash position on your broker's account. Yeah. Okay. Now, and by closing it on Monday, the position is already elevated. So all the more that you do not see the effect on your cash balance on your account. All right. So that's it for tonight's session over here. We overran by a little bit, but that's perfectly fine. It's part of being able to educate all of you in the world of options as well. And I hope you did enjoy the session. Before we go, if you enjoyed the session, once again, help me click the like button, help me click the share buttons over here, right? So that I know it's going to be useful to all of you. Because if it's not useful and beneficial for all of you, then I'd rather not continue this, because I don't want to take away your Friday evenings from the people who are important to you as well. Yeah, all right. So go ahead, click the like button, click the share buttons for me. All right, and I'll see you next Friday, everyone. All right, so next Friday on Portfolio Building Live with Terence once again on Friday evenings at 10:30 p.m. Singapore time, GMT +8. Thank you very much for joining me this Friday evening. All right, I'll see all of you next week. Bye-bye. All right, thank you, Sebastian. Thank you. All right, bye-bye. Thank you, Sunny.